Welcome to our Financial Institutions and Savings Account workshop. Today we will cover the different types of financial institutions available to us and the benefits of having a savings account. Here at Workforce Solutions Cameron, we understand how confusing and stressful it is to talk about money. With that in mind, we put together this information for you. Today, we will start a workshop by reviewing financial institutions. We'll learn the different types of institutions available to us. This will help us decide which financial institution is the best fit for our personal financial goals. We will also learn about the importance of saving accounts, and some extra tips. Financial institutions. Let's begin by reviewing what is a financial institution. It is a company engaged in the business of dealing with financial and monetary transactions, such as deposits, loans, investments, and currency exchange. In other words, they deal with anything and everything that has to do with money. There are three types of financial institutions that we will cover today: banks, credit unions, savings bank or savings and loan association. We will now review the three of them in depth. A bank. A bank is a for profit institution governed by federal and state laws and regulations. Banks make loans, pay checks, accept deposits, and provide other financial services. Most banks are insured by the Federal Deposit Insurance Corporation, FDIC. The FDIC protects the money people deposit into your bank accounts when a bank fails or when a financial crisis induces large numbers of people to withdraw their money. A credit union. A credit union is a non-profit institution owned by people who have something in common. For example, working in the same industry. You have to become a member of a credit union to keep your money there. Most credit unions are insured by the National Credit Union Administration, NCUA. This agency was created by the United States federal government to monitor federal credit unions across the country. Lastly, we have a savings bank or savings and loan association, which are similar to banks. These companies were created to promote home ownership and therefore have a majority of their assets in housing related loans. Although many banks also make home loans, a savings institution main business is to make home loans. Like regular banks, savings banks are usually insured by the FDIC. Let's move on now to savings accounts. We'll begin this part of the workshop by reviewing the importance of saving in our life. Having savings will allow you to enjoy greater security in your life. If you have cash set aside for emergencies, you have a fallback should something unexpected happen. And if you have savings set aside for discretionary expenses, you may be able to take risk or try new things. A brief example of some of those risks would be investment opportunities. So, what is a savings account and how is it different from a regular checkings account? A savings account is a place where you can store your money securely while earning interest. Using a savings account creates some distance between everyday spending money kept in your checkings account and cash that's meant for a later date, like for an emergency, vacation, remodeling projects, etc. What can you do with a savings account? With a regular savings account, you're allowed to put money in, make a deposit, or take money out, make a withdrawal. To keep your account open, the financial institution may require you to keep a certain amount of money in the account, called a minimum balance, at all times. They will also limit the number of times you can withdraw money each month. On the positive side, the bank pays interest on your money, either every month or quarterly. Remember, this is money you want to keep aside for an emergency. It is not your daily use money. We have 3 tips for you to start saving today. First and foremost, to get you started in the path to financial stability, it is very important to understand the difference between needs and wants. A want is something that we desire to have and is usually a matter of taste or preference. On the other hand, a need is something that we need to survive. Think of water and lemonade. To quench our thirst, some of us may want a lemonade. However, all we need is water. Having reviewed the difference between these 2 words, think about all the times we overpay for our wants. This is especially impactful when we live paycheck to paycheck. For instance, a functional car might be all we need to transport us to work, but sometimes we want a nicer, brand new car. The new car might make us feel good, but will definitely cost us more and may affect our finances in the long term. Another example, something that is likely to happen more frequently, dining out. Going out to a restaurant is a want. Cooking your own meal with groceries you buy from the supermarket is more cost effective. Remember, needs are basic survival elements, while wants are things we like even though they are not essential to our lives. Understanding the difference between wants and needs is the first step to making better decisions about how we are spending our hard earned money. It helps you to put things into perspective. Second tip, pay yourself first. Each month you get a paycheck or receive income. Naturally, there are bills and other expenses that you pay every single month, including rent or mortgage, utilities, phone bills, groceries, and more. Now, before you pay those bills, allocate part of your income into your savings account. It can be anywhere from 1% to whatever percent you're able to afford. Some say 10% is a good goal. Of course, if you can set aside more than 10%, that's even better. In any case, make sure that this money doesn't get spent in bills or purchases. This money you are setting aside to pay yourself is strictly for you to put into your savings account. It is not to pay for little luxuries or wants. If you are living paycheck to paycheck, this will prove a bit difficult at the beginning, but in time it will become a good habit. Remember, you are building a buffer that will fund you in case of an emergency or another goal, including traveling, down payment for a house, and more. Another savings tip, make sure you are on top of your recent transactions and available balances on both your checking account and your savings account. See where your money is going and make sure your balances are correct. You may check your expenses and transactions through different online banking and mobile banking. And you can check your balances on the phone, at your preferred bank, and with an ATM. We hope this information helps you take more informed decisions regarding your money. For more information on savings accounts, we have included some sources here which we hope are helpful in your path to financial security. We really appreciate your time and wish you best of luck.